this topic will help us understand what is the statutory framework for not-for-profits. Again, here I'm not going to confuse you with sections and provisions, but I will try to help you to understand why is it that in law the not-for-profit sector is given a different platform or a different pedestal in terms of treatment, especially in the income tax law. The other law, of course, the FCRA law, is meant only for us, and the CSR law is why I'm actually including it, and the ESG section of that is primarily for us to understand what is it that we need to know under the CSR law as not for profits for being able to better implement uh, and better manage CSR funds, because CSR funds are now going to be the mainstay for any organization in the coming year. I mean, have already become and will increasingly become in the coming decades for this country. So let's begin with the layout. The layout is that we are going to cover three laws, okay, and these are the ones: the income tax law, the FCRA, and CSR, because these are while there are other laws that are applicable, which could be social security laws and GST and whatnot. The securities law for not-for-profits, basically the social stock exchange. But then we are going to cover these. If I'm able to do that in the next 2 hours, shall be good. Because these are also quite comprehensive. So we will begin our discussion with the income tax law. And before that, let's understand how charitable work uh, does happen in this country. So in India, if we were to look at charitable institutions that are set up for charitable activity, there are three kinds of entities that can be constituted slash incorporated for doing charitable work. I'm not saying for profit cannot be. For profit cannot be, but because of the fact that because of the aspect related to taxation, and that there are entities already mandated for charitable work. Um, these are the three: the society, the trust, and a Section 8 company. Now, these are constituted or incorporated under different acts. For instance, the society is under the Societies Registration Act of 1860, and then and that is superimposed by the State Societies Act in most states. As far as trust is concerned, it's governed by the Indian Trust Act, and in several states like Maharashtra, Gujarat, Rajasthan, and Karnataka, Madhya Pradesh, there are separate trust acts or and charity commissioners. And of course, the Section 8 company, which is incorporated under the Companies Act, current Companies Act of 2013, or the erstwhile Companies Act of 1956. So these are called not companies not for profit, and they are mostly designated as Section 8 company. In the 1956 Act, it was the Section 25. Now, while society is constituted, trust does not have any entity of its own. It's only the trust deed that gets registered. So while when we talk about a trust, the trust is not registered. The trust is created by way of registration of a trust deed, while a society is constituted and Section 8 companies incorporated. Now, uh, I will not go into details of these three types of entities, but just want to say that this is the constitutional basis for charitable work. But once you have constituted, depending upon what your preference is, what your idea about doing charitable work is, and which form of organization suits you best, then of course you come into the same legislative uh, 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 regulatory framework, which is applicable to all three types of entities uniformly. And we come first to the income tax law. Now, before we move on to income tax law, please remember that when you constituted your society or your trust or your Section 8 company, you decided what are the main objects of that entity. And those are the objects that you will pursue. Now, when you now move from constitution to registrations is where we are now heading. And we are now heading towards the income tax law, because that law gives us the special privilege of our income not being taxable. Of course, this is not unconditional tax, non-taxation. It's based on our compliance with the terms and with the provisions related to income tax, and that's the most important part. Otherwise, the exemption will not be granted. So, before we move on to what are the key aspects in the income tax law which non-finance people should also understand, let us first see what is the definition of charitable uh, purpose in the income tax law. And the charitable objects that are recognized in income tax law are these seven. Okay, the relief of the poor, education, yoga was introduced couple of years back, medical relief, environment, monuments, and the last one is the residuary limb. So there are seven limbs for a public charitable organization. Now we are talking of charitable organizations. So we're not talking of religious organizations. They are a separate category. But most organizations are charitable, and those have to be public charitable, meaning that they are addressing their objects to public at large. They do not earmark the community or the beneficiary per se. It is the activity and the social service delivery is addressed or directed towards the community at large or public at large. That's how it is called a public charitable entity. Otherwise, if you were doing private work or addressing a couple of people, then that will not fall within the definition of public charitable. So the seventh limb is what is called as advancement of object of other general public utility. And this means that if you do not fall, if your objects in your charter do not fall in the first six, again, these first six are not very elaborately defined, but you should be able to see the functional aspect of each of these. If you fall into these, then probably you can select them. But if, for instance, for some reason it cannot be that, then probably you will have to look at the seventh residuary limb, which is general public utility. Now, please remember that if you were a charitable organization, then any kind of business which is incidental to fulfillment of the object is permitted as a charitable activity. So, for instance, if you are into yoga, selling yoga books, selling yoga mats is possible. If you're into education, having a hostel or a bookshop or buses for flying is for the purpose of education, for the purpose of the education that you are imparting, not other than that. Then it will fall into pure commercial, and therefore the relationship between any business has to be decided on the basis of whether it is fulfilling or is it incidental to our main object or not. In the case of general public utility, also commercial activity is permitted, provided you are into the general public utility, but with a caveat. The caveat says that your total commercial receipts under general public utility cannot be more than 20% of your total receipts, which is not the case in the first six limbs. However, I want to again caution you that charitable institutions and programmers must know this. Charitable institutions cannot just do any commercial activity. It is prohibited, because then you move out of the exemption status as a charitable entity. That's a dangerous area to get into. However, as long as you are doing any commercial activity and not generating profit, which has also been settled by law by courts as far as position of business is concerned, but the business is incidental to the attainment of the object, is something that will still be considered as commercial, as charitable, as long as there is only a recovery of cost or there is a marginal profit. Now everything is dependent on the organization to justify that this has happened or not. Otherwise, the assessing officer can say, well, this is pure commercial. So you have to be very careful in terms of that. Now, this is how income tax defines charitable objects. And please remember, we should be mindful of our objects and our selection of charitable objects while we are registering ourselves in income tax. Now, in income tax, please remember, most of you will be registered under what is called as 12AB or Section 12 or Section 11 and 12 of the Income Tax Act. 98-99% of non-profit organizations are registered there. That is the point number two. The first one is 1023C entities, which, just for your information, uh, are entities which are basically in the area of education and health. Primarily, they are restricted to only those two categories. However, these organizations from 1/10/2024, whenever their registration comes up, will all be subsumed into 12A. So section 11, 12 are de facto the sections now under which all charitable institutions will be registered. So we are talking of registration in income tax. Now we are already registered as a society, trust, and some section in company, but now we are now needing to get registered under income tax. The point number three essentially is for organizations which are into research, scientific research, that's called section 35. And there are certain entities set up by the government which are also not for profit. They are covered under section 1046. So the government might set up several, or both the central and the state governments might set up not for profit entities for delivering services. Like, for instance, the National Skill Development Corporation, the Textbook Board, so many, All India Technical Education Corporation. So several of these organizations might be created which are not for profit, and they will all be registered under 1024 or 1046. The fourth one is cost is something that we all take, which is called ATG approval. Please remember, this is called approval. Why? You are only approved under ATG. The benefit of ATG goes to the donor who is giving you money. We do not get any benefit as ATG in terms of getting an ATG approval. We only benefit to the extent that the donor benefits. The donor gets an ATG exemption to the extent of 50% or 100%, as the case may be. So generally, point number two and point number four are the two registrations that we normally take. Now, coming to the current registration regime, and let me tell you, in income tax, the biggest compliance or existential aspect for a not-for-profit is no longer anything like FCRA or other things. It's the income tax law. Why? Because the income tax law was changed in 2021, and it said that the perpetual registration and perpetual approval of section 12 of your registration under income tax or your approval under ATG has now been abolished. So all organizations now would have re-registered. If they want to start, they will have to do a certain process, and every 5 years or 10 years they will have to get renewed, just like FCRA registration. So there is early per, the system of perpetual registration under income tax has been abolished. Now, so a lot of you might have actually got re-registered, okay, and your renewals are also coming up in 2026-27, which means you will have to apply. I will only give you a glimpse of what that means because that's important for you. Now, unregistered entities which were not registered were also allowed to get registered. Entities which were created afresh were given provisional registration, because when they used to go to income tax as new entities, the income tax department would not entertain their claim for getting a registration, saying that please show us some, demonstrate to us some charitable work. However, the government has facilitated there by saying any new charitable entity can now become provisional, can get a provisional registration, and will be included for purposes of exemption. And within a period of 3 years or within 6 months of commencement of charitable work, they will have to get themselves a regular registration like the others have a regular registration. If you modify your objects, you will have to re-register. Okay. And then, of course, at the last, you are seeing renewal. So if you have got a re-registration, if you got a provisional because you were new and then got a provisional to regular registration, that will all come up for renewal based on the certificate that has been issued to you. Now, those certificates are in a form which is called form number 10EC, and that particular form will be common for both section 12, which means that you are given exemption from income tax, and ATG, that means that you are the contribution made to your organization will enjoy benefit of exemption or deduction, sorry, benefit of deduction under ATG for the donor. Now, please remember, this is a slide where I just want to, just mention that all organizations which have been registered in 2021 when the new regime was introduced of registration for not-for-profits, were given a 5-year registration without any questions asked. Now that period is going to come to an end on 31st March 2026. Okay, 2026. 6 months prior to March 2026, meaning 30th September 2025, they have to now apply for renewal of their 12AB, meaning renewal of their exemption status and renewal of their ATG approval, that is benefit to the donor. If you do not do that, your registration will cease and you will come out of the definition of charitable work or charitable institution. Okay. Now, this particular renewal will be after a process of due inquiry, which means the department is now going to evaluate your application, renewal application, in what is called as form number 10AB. And the same 10AB will be applicable both for 12A as well as for ATG, but you'll have to file them twice, just as you filed them for re-registration in 2021, separately for 12A and ATG, not thinking that once you file it, you will have to select which section. So you'll have to select section 12 for 12AB renewal, and you'll have to select ATG for renewal of ATG. Now, those organizations from with effect from 1st April 2025, that is this financial year, those organizations whose turnover, whose income in the past 2 years, that is 23-24 and 24-25 financial year, and who are now required to make an application for renewal before September 30th, 2025. In that case, a relaxation has been provided. So if you do not have turnover income of the 5 crores or more in the past 2 financial years preceding the year in which you are making the application, you will get your registration under 12AB for a period of 10 years instead of 5 years. But if you're crossing 5 crores, then you will get it only for 5 years. However, ATG approval will still be for 5 years in terms of renewal. So when you get your renewal done, if you are less than 5 crores, your 12AB registration will be renewed for 10 years. Please check that. While your ATG renewal will be for 5 years because consequential changes in ATG have not been made. Similarly, for provisional registrations to regular, they will first get it as 5 years. So that is a change that has happened from 1/4/2025, so that smaller organizations don't have to run to the department every 5 years. This is the single most biggest challenge for not-for-profit organizations in the current financial year. So, as programmers, you would know that unless our 12A registration is renewed, we will come out of this charitable status. And that means that our entire structure collapses. That is how critical the 12A renewal is. ATG, if you can't get, then probably you will not be able to do CSR. You would know that if we have to do CSR fundraise, then we should have both 12A and ATG approval, not one. Okay. 12A registration is represented or is reflected through registration under 12AB. Okay. That is how it is. And the form I said is 10AC for earlier registration. But when you will get your renewal under 12A and ATG, it will be in another form, which is called Form 10AD. So you must also, I mean, I'm not confusing you, but you must at least know that, because at times when the donor asks you for 10AD, the same 10AD will be for 12A as well as for ATG. Okay. And then you'll have to see under which section this 10AD renewal has been granted. Now, uh, getting this form, even applying right now for renewal is possible, not waiting up to 30th September. However, before uh, you apply, one must need to see our compliances on income tax, because if our compliances or if there are major non-compliances or major errors, the department may refuse to give us a renewal. So it is good that before we apply or for renewal, our track record on the income tax portal is as clear, as clean as possible. That is what the idea is. Now, moving on to some points that I want to make the program people know is, If you have a certificate of registration under 12A, now mind you, 12A means that you are under a chapter or in a separate pedestal or platform where your income will not be considered as liable for taxation. That's what is called 12A. And that 12A benefit you get because of another section, which is section 11. So the section 11, 12, and 13 are actually the total framework for not-for-profits as a special privilege that has been given to us, and that is not available to any other kind of entity. That is why we are special. That is why we are special, because the government recognizes that we are doing work for the community, for the society at large, for public at large. We are not into making profits. We are into the we are into the business of service delivery. We are in the business of accountability. So that is the reason, that is the primary assumption on which not for profit entities are given this privilege, and we cannot afford to lose that privilege, because if we lose the privilege, we lose our ability to do charitable work. That's something that I want to say. Or at least our ability to get funding, because that those registrations are something which are so central to raising funds. Now even if we are not having that and want to carry on with charitable, probably we can, but how do we raise funds? Because we these registrations and approvals are critical for being able to raise funds. Now, if we can't raise funds, how do we run programs? That's how we have to understand as programmers. Now, coming to the power to cancel registration is why I want to not to create a fear in you, but just because when we work in the field, we have to actually be mindful of what we are doing. Sometimes our actions, because of our, not being educated or aware about the very critical legal provisions, it might lend our organization into trouble. Now this is what is called as specified violations, and there are 7 of them which can result in cancellation of our registration. So there is something called renewal that we have seen, and the renewal may be rejected. That is one thing. The renewal application may be rejected, not cancelled. It may be rejected because the department feels that there are non-compliances, or there are, reasons why you should not be given the renewal. Now, this, if you were in FCRA and the renewal were not come, you will not get affected as a charitable institution. But if your renewal does not come, then you are affected as a charitable institution itself. This is a penal. These are all cases which means that there is a cancellation that is happening because you have violated the law. That is what I'm saying. Now, one is if you have spent your income for other than the object for which you have been set up. So you have to be very clear that your income is applied only for the object. Second is if you have business income which is not incidental and you have not kept separate books of accounts. I said you can have business income as long as that business income is incidental to the object, and therefore it will still be part of your charitable activity. I said business income not incident, okay, which means you are now getting into the territory of pure commercial receipts, which is not permitted for a charitable institution. If you are doing private religious work as a charitable institution, if you are doing work for a particular religious community or caste, okay, so those are all addressed to specific people. Then violation of other laws. No, there are several laws. If you are violating laws which affect the achievement of your goals or your objectives, if you are benefiting somebody who is very closely associated with creation of that organization, these are called specified persons and they are under section 13. We'll just cursorily see. So the founders, the settlers, the managers even are under section 13. And can they be given benefit? They can be given benefit, but they cannot be given unreasonable benefit. And therefore, when I'm writing benefits under section 13, I'm saying unreasonable benefit if you are giving, then those situations might also call or attract or trigger a proceeding for cancellation. Section 11, 5 modes of investment basically means that there are dedicated modes of investment in which you have to put your money. We will see that very quickly when we go through more of these details. And whatever was the condition and terms and conditions mentioned in your registration certificate under 12AB or ATG, if you have violated them, then also will trigger the case of possible, uh, you know, uh, inquiry and possible cancellation. Now, this cancellation can lead to very, very difficult situation, and that is what is called as uh, exit tax. Now, when there is a cancellation, you exit from the charitable status and you land into a situation where your assets. So, if your registration is cancelled, it will be followed by a notice from the department saying that we will now want to, you know, take exit tax from you. What is exit tax? Exit tax means that we will take tax on the value of the assets that you have minus the liability, the net assets that you have. Now, normally you would be thinking that taxation will be on income. But in this case, if there is a cancellation or there are other situations which are all mentioned here, A, B, C, D, E, which I'll just tell you. But the biggest danger is that the tax will be calculated on the value of the assets, on the market value of the assets, on the fair market value of the assets, which means you might not have the cash to pay the taxation. You might have to actually sell the assets to pay the tax. Now, what are the situations in which your exit tax will be applied by the department? One, your registration has been cancelled. If it has been cancelled, this means penalty. Second thing is if you have modified your objects which are not in line with your primary objects for which registration was given, if you have merged yourself into a non-profit entity, if you have closed your entity and but you have not transferred your assets to another charitable institution, and the last one is that if you have not registered, if you have not renewed your registration. So it's not just cancellation as a penalty that attracts exit tax, but even your non-renewal of your registration will attract this tax, and the tax is at the rate of 30% on the fair market value of the assets of your organization. So I have yesterday only somebody said my renewal has been rejected, which means point number E, and my non-renewal has been followed by a notice from the department under this particular section. I'm not reading the section, but under exit tax saying, please submit to us your financials and whatever is the market value of fair market value of our fixed assets at the rate of 30%, you will have to deposit tax. So these are situations which you cannot now afford to get into, because then not only your charitable status gets affected, but you might have so much of penalty which you might not be able to pay. Now, for programmers, this is the exit tax that we talked about, and therefore we cannot have a position of non-renewal. We cannot have a situation of cancellation. Those are all just not possible for our organization. So we have to be working as programmers also, not just finance people, but you also have to work in such a fashion that our organization doesn't get into that territory, and therefore the knowledge and awareness of that is equally important for you, because you're all the time in the field or somewhere else. You might not actually know the repercussion of your action. Now, one particular point that I will want to tell you is anonymous donation. Now, our organizations get a lot of donations, and sometimes we get cash donation also, and the cash donation is known donation from a known donor. So that is acceptable. Can we get cash donation? Yes, we can get cash donation. We are not talking of religious. We are right now talking of charitable institutions. Okay, we are talking all charitable. So as a charitable institution, can I get cash? Yes, I can get cash. There is a ceiling to getting cash, which is 2 lakhs from a donor per day for a transaction, not more than that. So you can't break the transactions and take 2 lakhs every day. But for a particular donation or for a particular transaction, not more than 2 lakhs of cash can be. Otherwise, equal amount of taxation will be there. That's one part. But within that ceiling, you can take cash. Now, what is the difference between cash and anonymous donation is what we are trying to understand. So donations you will get in by way of check or banking channel, and you might also get through cash within limits, not attracting penalty, and also know who is giving you the cash. And that person who's giving you cash more than 2000 will not be getting the benefit of ATG. So generally, that person will not give you cash. However, we are assuming that people might still want to give cash, but they can give cash. Now, anonymous donation means that the donor's identity, that is the name and address of that donor, is not known. That is the meaning of anonymous. So we do not know who gave the money. Somebody deposited the money in our bank account, but we are not able to trace the name and address of that person, although it's a banking transaction. So the big dilemma is that if somebody deposits money, it is, or you do crowdfunding or you do any such mobilization of resources, you must have a mechanism where you are able to at least track. Where you get big funding or a lump sum amount from big donors, their name and address will not be an issue because it will be known. So if the identity is not known of the donor, such donations are called anonymous donation. Anonymous donation as a public charitable institution. Now, what is the provision for anonymous donation is important to know. We cannot get anonymous donation more than 5% of our total donation or 1 lakh rupees, whichever is higher in a financial year. Whichever is higher. So 1 lakh may be higher or 5% may be higher. So if 5% is 2 lakh rupees, it will be higher than 1 lakh rupees, it will be 2 lakh rupees. But if the anonymous 5% is 50,000 rupees, then 1 lakh rupees is what we are going to get. Now, if we cross that amount in terms of anonymous donation, then again there is a taxation of 30% on the anonymous donation beyond that amount. So one has to be very careful about anonymous donations also, which means if you are mobilizing resources in the field, you should ensure, or in the field or through crowdfunding where you are actually looking at individual donations, it is always good to have a filter or a mechanism whereby a person, before he or she is giving you donation, also is able to share with you the name and address. Otherwise it will be in the fall in the domain of anonymous donation. Now, we know that donors get ATG benefit. Now, the ATG provision was being misused. So the government from 1/4/2021 said that now onwards, the donations that are made for claiming ATG benefit, you will now have to report that donation on the portal, on your profile or on your portal. And that is what is called as the statement of donation, which means that you will have to file a form which is called Form 10BD. We must know that because Form 10BD has to be filed annually for all the donations that have been received, where irrespective of whether the donor is claiming ATG or not. Now we know ATG means that money should come through banking channel. Up to 2,000 rupees, the ATG is available as a benefit. But if the cash donation is more than 2,000 rupees, then the donor will not get the ATG benefit. If you receive something in kind, it will not get ATG benefit. All right. Now, again, the ATG for us, for NGOs generally, as I am saying, are the benefit that goes to the donor is 50%. In certain cases, it is 100% under ATG. But for our type of organizations, it is 50% benefit to the beneficiary. However, subject to 10% of that donor's gross taxable income. That's his part in terms of. So, does the donor get uh, all the amount as ATG benefit? No, it is also restricted to 10% of the GTI, the gross taxable income of that donor. Finally, not more than that. So, but that's the provision of Section 80G, just for your information. But what is critical to know is that we must, when we mobilize donation, have complete details of that donor. Why? Because we have to file a statement of donation every year. For instance, for financial year 25-26, we will have to file it by 31st of May 2026 for the entire donation that we got in the financial year. Now, we will also have to specify whether we got the donation for corpus. I think some of you would know what corpus is. That's a lump sum amount that the donor has given, uh, saying that it is a corpus, specific direction that it be treated like a corpus, and corpus cannot be consumed. It has to be shown as your capital. Okay, whether it is for a specific grant, which is a restricted grant. As you know, program grants are restricted grants because they are restricted in terms of purpose, restricted in terms of time in terms of use restricted by the grant contract. Others could be donations. You have to provide the UI and the unique identification number of the donor. So all this is mentioned here. So whenever you are mobilizing resources, then you must, at the time when you receive the funds, you must also have details collected for all this, so that when the form 10BD needs to be filled after the close of the financial year, you don't have to run around for this information. Because if you're not able to populate that, give that information, it will not get into the 10BD, and it might actually end up becoming being treated as anonymous donation by the department. Okay, and the third thing is that the donor will not be able to get the ATG benefit, because without filing the details of the donation in 10BD, the donor will not be able to get what is called as Form 10BE, which is the certificate of donation. So no longer manual certificate of donations are admissible now. Even if you issue manual certificate of donations, the donor will not be able to get the benefit of ATG. The donor will be able to get the benefit of ATG only and only when you will download the Form 10BE after completing the submission of Form 10BD, and that 10BE donation receipt will be the entitlement of the donor for claiming benefit of ATG. Moving on to the structure of exemption under income tax, very at a very overall over at a very top level, I'm going to explain. And we have been talking that the sections that govern us, and I'm not even asking you to remember those sections, broadly are three, what is called as 11, 12, and 13. However, we have the new income tax bill right now, and therefore the income tax act might become a reality in 2025 or 26, and these section numbers will change. uh, not much change in provision, but some change, of course, there, but not much change. Of course, the numbering and the presentation will change in the new Income Tax Act, which probably comes in on from 1st April 2026. Now, the section 11, 12, 13 are what we are going to study. And this is the section which gives us the exemption. So the section 11 gives us the exemption. The section 12 enables us to get the benefit of section 11, and the section 13 takes us out from the benefit of 11. So 11 and 12 are the critical sections in terms of 11 giving us the benefit and the 12 entitling us to that benefit. Entitling us to the benefit. So 12AB registration is entitling us to section 11 benefit. Now the section 11 says your income from the property of a trust which is for charitable or religious purpose and applies the money, apply means spends the money in India for religious or charitable purpose, that income will not be treated as income for taxation, provided 85% of that income has been spent. Suppose your total income was 100 rupees. So 85 rupees you have to spend out of that 100 rupees on charitable or religious activities within India. And then only will this section be applicable. However, this section will be applicable only after you're registered under 12A. Okay, if you're not registered, then you can't say I am doing religious charitable activity and give me benefit of 11. No, because I said the section 11 benefit or the benefit of non-taxation is subject to a condition that you are complying with not only registration, but two, three more other conditions that I'm going to tell you. So 100 rupees you got as income, you will have to spend 85%, 85 rupees out of that. 15 rupees you can set aside for your whatever you want to do. If that is not spent, the government says if that is not spent, then you can set it apart and we are not going to tax you. We're not going to ask you, because we know that some money you have to set aside every year, because for creating some kind of buffer, because you are not a profitable entity, and therefore this particular amount we are not going to ask you for any questions, nor are we taxing you. But you need to spend 85 rupees out of 100 rupees. That's the 85% rule of your total income. And what is called application is nothing but utilization or expenditure. That's how it is stated in the income tax law. Now, as far as corpus is concerned, the clear direction is that corpus is not income, it is only capital. So you'll have to show it as capital on the balance sheet side, and you'll have to invest it into the modes of investment, and the income that you will get actually will be income, which you will have to spend 85%. Got it? Now, if you are not able to spend 85% or 85 rupees, suppose you were to spend 70 rupees. Now, there are 15 rupees that are left. Will they be taxed? No, not necessarily. If you do not, if you now then decide to, not get it taxed, then you'll have to do something. If you do not do anything, then it'll get taxed. So out of 85 rupees, out of 100 rupees, 15 rupees, no questions asked. The balance 85 rupees, only 70 used because of some reason. You got the grant at the end of the year. Some other things happened, some conditions which forced you not to be able to spend the money. Then 70 rupees only you were able to spend. So you are now left with 15 rupees. Will it be taxed? Not necessarily, provided you opt for one of the two options that are available. One is what is called as deemed application. It says that I have got the income, but I couldn't spend the income. So please deem this as application or utilization in this year, but I promise to use it in the next year. This is what is called as deemed application. However, I'll have to file a form which is called Form 9A. I'll have to submit that. I'll have to say this is the amount of money I could not spend, which may be treated as deemed application for this year, but I will spend it next year. And if I don't spend it next year, then it will be taxable. Now, the second option is where you have a surplus, that is, this 15 rupees is to be spent not next year, but in 3 years, for instance, then I will opt for what is called as accumulation. Accumulation means that I can carry this money and utilize it over a period of 5 years. But if I'm not able to do it, to utilize it in 5 years, and I'll have to show the utilization from this money. From this money, I will have to report utilization in my income tax returns. So I'm not talking about that. What I'm saying is, you just cannot say I utilized. You'll have to prove that you utilize the money. Otherwise, this money at the end of 5 years, if not utilized, then it'll again become taxable. Then there is no other option but to pay tax. Okay. So here you'll have to actually file Form number 10, show what are the objectives for which this money is being accumulated for a period of 5 years. And every year you might utilize it and show it as application. So the amount of accumulation will get reduced. However, you'll have to invest it into certain modes of investment, number one. Number two, you cannot give it as a sub grant to anybody. So if you're carrying this 15 rupees, you cannot give it to another 12A registered entity for being utilized. This money has to be utilized by you. That is the condition. However, it doesn't apply in the case of deemed application, where the 15 rupees can be given to another charitable organization and can be used. That inter-charity donation is not available for accumulation. You can repurpose the accumulation after a period of some time. If you find that you will not now need to change the purpose of it, that will be allowed by the department. So these are the two ways in which your money can, and every year you will have to repeat the same purpose in terms of seeing whether you have been able to utilize the entire amount or not, or will you need to set aside this as deemed application or accumulation. If in a particular year you have utilized 85 rupees out of 100 rupees, then these actions will not be okay. Got it? Now, two things I just want to also mention quickly here about income tax, because sometimes we tend to forget. One is that if you give cash or bearer payment more than 10,000 rupees to to a person in a to a particular person in a particular day, then that amount will not be considered as application, which means that that amount will not be exempt from taxation, because it will not be treated as an expenditure, and therefore your income will be more, and that amount of income will be taxable at 30%. That's one. So remember that. Second is that if you have not deducted tax, TDS, or if you have short deducted tax, suppose you have taken professional services 100 rupees, and the 100 rupees was under TDS, but you have not deducted TDS, then 30% of that 100 rupees or 30 rupees will be liable for tax at the rate of 30%. So sometimes what happens is, while you have utilized the money, still there is taxation, because you have not complied with the provision of certain sections of the act which need to be complied, and therefore your expenditure has been disallowed, which means the income is standing but the expenditure has been disallowed. So the income exceeds expenditure which you did not provide for under deemed application or accumulation, and therefore that amount will be the tax that will have to be paid. Then we come to section 12, and I said the 11th section, what does it say? The previous section, which is our critical section in terms of exemption. Income not liable for taxation under income tax. And why and how and the conditions we have just quickly seen. We have seen those conditions. And I would say I'm going slightly quickly, but there's no other option for me to do that. But I will request you to read these presentations and listen to the recording again, and that is when you will be able to understand this. As programmers, when you move up the hierarchy, these are the critical parts of any not-for-profit organization if you have decided to have your career for the rest of your life in the not-for-profit sector. These are such critical provisions in the income tax law, which is not something relevant only for finance people. It is equally relevant for us. I'm not talking of anything which is, this section, that section. I am only saying that's how when we sit in a charitable organization, why are we called charitable organization? Kabhi sochte hain, do we ever think about that? And why are we, as a charitable organization, we are given this kind of a privilege? And what is the privilege actually? What is the privilege is something that we need to understand. Now, I said you will be given that exemption provided you comply with, provided you use the money for religious or charitable purpose. Number one, yes, because you are a religious or charitable purpose by your very constitution. Got it. However, you will first have to get registration under section 12A, under section 12AB. Okay, 12A, and the registration section is 12AB. That is the registration certificate that we always share with donors, so that the donors know that this entity is entitled to exemption from income tax. Very important, first of all, to register. So that is one condition. Without registration, even if you are doing charitable activity, no benefit under these sections, no privilege. You are just another for-profit entity. Then the second one is that you have to maintain books of accounts. Okay, and go get, so books of accounts is what? Books of accounts, the finance folks will know, but only for your understanding, government now has mandated for not-for-profits what are the minimum books of accounts from 2022 onwards, what are to be maintained, and those accounts books have to be audited by a chartered accountant. And the third thing is that you will have to file your income tax return within the due date. Okay, so these three conditions, if we fulfill: registration, audit, and filing of income tax return within time, only then the Section 11 benefit will be there. Otherwise, our Section 11 benefit will be disallowed and we will still get a tax notice. Now, moving on to the section number 13, and this is important just for you to remember what is called as a section where the Section 11 benefit will not be given, which means that the money that is utilized in such situations which are covered under Section 13 will be will be taxable. Okay, and that might also, if that is repeated, might also lead to cancellation, as we had seen, violation of section 13, which means unreasonable benefit. Now here I want to tell you, C and D are the very important sections, which says that the income has, or the property of the organization has been applied for the benefit of any kind of specified persons. Now, what is a specified person? A specified person is a person who has a fiduciary or a responsible role in the organization, but because he's so close to the organization, can that person misuse the benefit or misuse the organization by doing something which is which leads to unreasonable benefit? So these C and D are the very critical factors that have to be kept in mind even by program people or people who are actually into managerial positions, to see that we are not giving any unreasonable benefit. Question is, can we give benefit? The answer is yes, but the benefit has to be reasonable. Now, who are the people who are covered as specified persons? These are the people: the founder, author of the trust, any person who has made a substantial contribution, which means any person who has made contribution of rupees 1 lakh in a financial year and aggregate to 10 lakhs in the lifetime of the organization. This is a recent change that has happened. So, in a way, the donors are also part of the this substantial contribution. Okay, but there are exemptions that have been given now also, where uh, 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 and the CC is the most critical. So their relative of these founders is also included and things like that. But the CC is very important. Any trustee of the trust or any manager by whatever name called of the institution. This is very, very critical. So we identify those people who are founders or authors or settlers. That's all right. Or the incorporate or the founding directors, that those are all there, their relatives, if they are members of an HUF, the member of that, this, that, whatever. But the more important thing is that even a trustee, even a manager, meaning a person who's in managerial supervisory position, is also a specified person. The question is, can we give benefit to these people? The answer is yes, as long as it is reasonable benefit and as long as it is in line with their experience, qualification, uh, and the pricing is something which is reasonable. Now, what is unreasonable is also defined here. Okay, these are situations where it is considered as unreasonable, where I have given money of the organization to these people without adequate interest, where I have given any building to these people without adequate rent, where I have given, and this is the third one is most important. If I have given any salary allowance to these people, which is not reasonable for the services. So, can organizations give benefit or salary or allowance unless the rules prohibit? The Even the founders can be given salary or allowance, but the condition is that salary allow, so they are members of the governing body, but they are also on employment. They can be on employment provided they fulfill the eligibility condition for education, experience, and their cost or their price or their salary is in line with what salary you would pay to a person who is from the outside market. So this third point is the most critical point in terms of seeing, because if the assessing officer says these remuneration to these people, the people we have seen in the previous slide, is unreasonable, that entire amount of application will be rejected and that will become make your trust that amount to be taxable. That is what I'm saying. Okay. Any services that you have taken of the institution without adequate remuneration to the institution, if anything has been sold by the institution at a lower price to you than the market price, or the institution has purchased something from you at a higher market price than what is available prevailing in the marketplace, if there's a diversion of fund by these people, all those situations, the benefit of income tax exemption will be withdrawn for that particular amount. So that is what is section 13, which says basically for specified persons, if there is any unreasonable action that they have taken, the benefit of section 11, which is the benefit of exemption, will not be available and that amount of application will be taxable. Now I come to two, three things here in terms of just an understanding for you broadly about TDS. We are continuing with income tax, but I'm taking you to the TDS section. So TDX is nothing but tax deduction at source. Just as in your salary, you get TDS. But when you are working in an organization, you will also have to deduct TDS for services that you have availed. In not-for-profit organizations, broadly four sections in the TDS family are what are normally applicable. One is the salary 192, which is the salary that you people get. The other one is payment to contractors 194C, the payment for technical and professional services 194J, and payment for rent. Now we must understand what that means and what are the rates of taxation or threshold, not rate of taxation, and also the threshold. Both we have to understand because there's been a change from 1st April 2025. Now, as far as salary is concerned, we all know we have two regimes, the new regime, which is the de facto regime or the default regime, and the old regime, which is also there where you can get deductions. So whatever is the salary, you will have to decide which scheme you will come, and TDS will be deducted by the employer. So this is the old scheme and this is the new scheme, which does not have any exemptions, but it has lower taxation. And probably you'll have to decide, compare between both the schemes and say which is less taxable, and then file your form number 12BB with the employer and say, well, this is the scheme I will opt, and the taxation will be TDS will be deducted. If, for instance, here you are saying uh, up to 4 lakhs, and then there is this benefit that is available up to 12 lakh rupees, provided your it does not cross 12 lakhs. That is that income tax benefit is also available. So you that computation will be done by the finance people, and but you will have to make that assessment for yourself. So every organization where there is an employer employee relationship, so the first thing that has to be understood is that the contract of engagement is of an employer and employee. Only then Section 192 will be applicable. That is what has to be understood. If it is another arrangement like a contract of for manpower contract, or if it is a professional or technical services, then another other sections will be applicable. Now, 194C is something that we do a lot. So we do advertisements, we do, something called broadcasting. So maybe some radio jingles, some TV commercial. We are doing, we are engaging catering services. We are getting something manufactured. We are engaging people on contract. Okay, engagement of manpower on contract. We are hiring services of transporters, or we are getting AMC done, we are taking annual maintenance contracts, some kind of small contracts here and there. They all fall under Section 194C. This is called payment to contractors, where if you are where if an individual invoice does not cross 30,000 in a year, and if the total of invoices do not cross more than 1 lakh, there is no TDS to be applied. If the if initially you have not deducted, but at the end of the year, by the end of the year it crosses 1 lakh, then on the entire amount you'll have to deduct. The For individual HUF the rate is 1%, and for other than individual in HUF the rate is 2%. So as people who are managing field operations and managing field offices and making passing expenditure, we must know what are contract services and what are the rates of taxation TDS that has to be withheld. TDS is withholding tax. So out of 100 rupees payment, if the bill was for 100 rupees, you will only pay 98 rupees, and 2 rupees will be deposited with the department, with the income tax department by you, which will be available to that person through the through Traces portal. That credit will be available for either taking refund or adjusting against their income tax liability. The reason for this is that government needs money for running its establishment for the entire year. And the second thing is that the government wants to check whether prop there is no leakage in terms of reporting. So if even 2 rupees has got deducted, the entire 100 rupees has got captured in the system. So the person cannot not report 100 rupees of services. That's what is the reason. So the next one is professional and technical services. Here, the threshold professional services is 10%, and technical services, fee for technical services and fee for professional services. The That's 194 J, A, and B. And the rates are 10% for professional services and 2% for technical services. If you are engaging a call center, then it is 2%. What is the threshold? The threshold has been revised from 30,000 to 50,000 from 1st April 2025. Please remember that. And so you need to now understand what is professional service and what is technical services, because the rate of taxation is different. Now here I've copied from the law exactly what is professional services. Professional services are legal services, medical, engineering, architectural, accounting, okay, or technical consultancy or interior decoration, advertisement. All that will be, if you're getting an advertisement made, not placing the advertisement, getting the advertisement, I mean the TV commercial being prepared or being shot and kind of made, then that is professional services. You will engage a professional communications agency for doing that advertisement for you. Now that, and there are certain other services that have been mandated by double 44 double A, that includes company secretaryship, legal services. Now these are specifically defined there as professional services. So then there is no question of whether to apply 10% or 2%. The answer is 10. However, when it comes to fees for technical services, this gray one box is where I have tried to capture it. If somebody is managing your operations, okay, so running or management of your business or your operations, that is management consultancy, okay. Technical means that some technical expertise that person has, some technical expertise of running some machine or some particular part of your process, or consultancy, which is advisory services, general advisory services, that will be part of fee for technical services. Now, there is some amount of grayness and therefore the gray box in terms of identifying whether there is an overlap between professional and technical. And if that grayness persists in your mind, then please apply the higher of the two rates. Because at the end of the day, the withholding tax will, the credit of that withholding tax will still be available to the person from whose invoice you have deducted. The next one is 194I, which is rent. Here again, the rates are the same, but the threshold has been increased. So if you are renting land or building, okay, or furniture or fittings, the rate is 10%. Earlier, the threshold was 2,40,000. That threshold has been raised to 6 lakh rupees from 1/4/2025. And in a particular month, if the amount is more than 50,000, then also the 10% applicability will happen. However, if it is less than 50,000 and does not cross more than 6 lakhs, then the 10% will not be applicable. So the government has actually dramatically increased the threshold from 2,40,000 to 6 lakhs. However, the idea also of keeping 50,000 is also to put that hook there, that if somebody is paying more than 50,000, automatically the 6 lakh is material, not material, doesn't matter. So that 6 lakhs will be basically into 12, 50,000. So they say even if for part of the year it is there, but more than 50,000, you will still attract the 194I. Moving on to so this is section 195. I've just said this is a section which is, so the four sections that we have done is 192 salary TDS. We have done 194C contractor payment TDS, professional and technical services 194 J, and 194I is for it. 195 is when you are making a payment to a foreigner. Okay. So if you have taken a services of a foreigner, then you'll have to make payment and comply with section 195. Now, what is a foreigner is also defined in section 195, and I have defined it here. So if that person is in falling in that category and providing services to you, then that service will have to also have TDS. You will also have to see the double taxation avoidance agreement with that country in which that person is residing. So there can be a lower TDS rate there. Generally, the TDS rates are 10% where there is a DTAA, and you will have to then deduct that tax, and your bank will share it with the bank, and the bank will then the forex department of that bank will make payment. If the amount is more than 5 lakh rupees, then your chartered accountant also has to give a certificate. So I'm not reading that out. What I'm only saying is that you will, that's called form number 15CA and 15CB. If it is up to 5 lakhs, then only you have to file the form number for 15CA with the department. But if it is more than 5 lakh rupees of payment to a foreigner, then the 15CB has to be there, where the chartered accountant files the 15CB and you file 15CA, and share both of those with the bank. Only then the bank will make the payment from there in foreign exchange to that particular foreigner. Okay, please remember this. If you are dealing with uh, if you are dealing with uh, availing services from a foreign. Now I come to the next law. So basically, I have tried to cover most of it in the law. And so we've done 1 hour of this, and the next hour we need to complete the FCRA. Now I come to FCRA, and uh, I will like to first just very quickly say what the definitions are, because the definitions are the driving factor in the FCRA Act. This is a regulations act. Okay. This act regulates foreign contribution. So the very name is Foreign Contribution Regulation Act. Now, the key concepts here in FCRA is what I'm actually first telling you, because if you understand the key concepts or definitions, you will understand the architecture of FCRA. We are not going to do one section, but I'm going to actually give you the FCRA. First is what is foreign contribution. So foreign contribution is from a foreign source, number one. So that's the first thing that you have to understand. Anything that's coming from a foreign source. So what is a foreign source? We will see. But money, or but anything that comes from a foreign source only is foreign contribution. Now, foreign contribution can be in the nature of articles, unless that is for personal use. Second is it can be in the nature of currency. The color of the currency is immaterial. So whether you get the money in INR or whether you get it in other currencies, as long as it is from a foreign source, it is foreign contribution. The third one is securities under the SCRA 1956. If you get that, that's also foreign contribution. Now, foreign contribution at anything which is fee for service or as a business transaction is not covered under FCRA. So if you are getting money for holding a workshop or a seminar or getting money as a charitable institution towards fee for a foreign student, that's not foreign contribution, because that's actually a consideration for services that need to be provided. So wherever there is a consideration for services, the act itself says it does not include, it's not part of FC. Now, the FC can be the primary FC that you get from a foreign source, but if any income you generate on that foreign contribution once it has landed in India is also called foreign contribution. So any rent that you get from building which you have constructed through foreign contribution, any interest that you get in your foreign contribution regulation act account is all foreign contribution. Now, coming to the second definition, which is foreign hospitality, it means that if by a foreign source, any hospitality has been extended to people who are prohibited persons, which we will see, basically people who can influence decision making, who can influence policy, then in that case, those persons before availing hospitality have to get approval for taking that hospitality through that foreign source or through that foreign contribution. So if you are extending hospitality through foreign contribution, which is from a foreign source, please ensure that the necessary approvals has been obtained by those category of persons who are covered under foreign hospitality before extending that hospitality. Okay. So that will cover cost of travel, cost of stay, or whatever. All that is foreign hospitality as far as hospitality is concerned. Now, coming to uh, what is a person? So we have seen foreign contribution because the FCRA Act controls foreign contribution and controls foreign hospitality. Now, what's a person? So there are four categories that are mentioned. Even an individual is a person. So please remember, even an individual is within the purview of the FCRA Act. The HUF is a purview of the FCRA Act. And the third and the fourth are the type of organizations that we are: association or a Section 8 company. Association would mean society and trust. Now, a person might be in this kind of a constitution. However, to be considered as a person under FCRA, there are three more conditions. One, that person has got registration for getting foreign contribution, not just being a person, but person with registration. And if you are not eligible or entitled for foreign registration, then if you still get some donor wanting to give you donation one time, then you will get what is called as prior permission or PP. Second thing is that the foreign contribution is for a defined purpose. The defined purpose is cultural, social, economic, educational, and religious. Okay, the CEERS, that is what I have mentioned. And when you see your registration certificate, you will see that you have mentioned the nature of activity for which you have got your registration. Please remember that nature of activity should resonate with your charter objects and also resonate with your objects that you have selected in your income tax. So they have all to be in symmetry, okay? Not that you do something here and do something there, because the charter of your organization is the driver for whatever you are doing, and therefore that consistency has to be ensured. So these three things have to be done. Now there are some category, and the third thing is that you should not, as a person, you should not be a prohibited person. So you have to ensure these three things. Some organizations which are basically floated by government, although they are charitable, are not covered under the definition of person through notification. So you have three category of persons. One is what is called regulated. People like us, we are regulated. And therefore, what is the architecture for regulation is what we are going to see. The second one is non-regulated because they have been exempted from regulation, although they are charitable. And the third one is prohibited. Of course, you can't get money. Who are prohibited persons? All this is prohibited persons. So you will see all those people who are basically in some kind of a public influencing position. Okay. These are people who directly or indirectly can affect the decisions relating to integrity, sovereignty, direction of of the country. People in political parties, people in government, judges, public servants, all of these people are the ones who are running the country as such. So the government wants to curb any money from a foreign source that can influence this, and therefore the regulation. So these people cannot be given foreign contribution. If they are involved with you in any capacity, you cannot give foreign contribution. That is what we need to understand. And these people cannot receive foreign contribution because in the previous slide I said a person may be a association, but if the person is a prohibited person, then that person is not entitled for foreign contribution, even though that falls in the definition of person. Moving on to what is a foreign source. Foreign source is the most critical part that we need to see. That will decide whether any money that has come is a foreign source or a local source. And that distinction needs to be understood, because we know this, that foreign contribution and Indian contribution, or foreign FC money and domestic money cannot be mixed. They are two separate streams of money where any mixing or merging of the two is completely prohibited, is actually a violation. Okay. So we need to be mindful of whether this is a foreign source or not foreign source, and accordingly take the money in your foreign contribution account or your local bank account. So the first thing when you receive foreign contribution, even before you decide to get the foreign contribution, is to first ascertain that that source is foreign or not. And that will clarify whether where you have to take the money. The foreign source is what I have mentioned here. I So everything like a foreign government, all these international agencies, there is a list of exclusion, 117 entities like the UN, the World Bank, the IMF, as a whole list which is available on the FCRA and online.nic.in. You can read that. If they are not, if they are included there, then such international organizations are not foreign source. So when you get money from UNICEF, the money is deposited in the Indian account because it's actually included in the list of exemptions uh, uh, from being considered as a foreign source. The third, of course, is foreign companies. The fourth is important. Earlier, if in an Indian company, which was established by laws in India, that is the Companies Act, if more than 51% of its shareholding was held by a foreigner, foreign companies, foreign government, then that was also considered as foreign source, although it was an Indian company. But the shareholding exceeding 51% made it a foreign source. That was removed, and now that condition does not apply. However, we have to see that the shareholding in that company does not cross the thresholds that are mentioned for FDI investment. If it crosses, then again it becomes a foreign source. If it does not, then suppose the FDI norm is 74% and 70% is shareholding, then no problem. If the FDI norm is 74% and the foreign shareholding is 85%, then again it is a foreign source. So that's something that one has to, all those foreign clubs, foundations, everything is included there. Even a foreign citizen, we know that a foreign citizen is a foreigner. So if a passport holder, however, we know this also that an NRI is not a foreigner because it's an Indian, but a PIO or an OCI card holder, that is a person of Indian origin who has a foreign passport, or an OCI, an overseas citizen of India who has an OCI card, are foreign source. So we have to be very clear in terms of, and if you are not clear, please call for documents to be able to substantiate whether you to decide whether it's a foreign source or not. Now, administrative expenditure is the other part in terms of our definition. So the law says here that, uh, and I'm not referring to any rule or anything, they're all written here. What the law says is that whatever foreign contribution you receive in a year, your administrative expenditure cannot be more than 20%. So your administrative expenditure is 20% of your receipt, not your expenditure. Please remember that. And recently, the amendment has been made where administrative expenditure, if it is not utilized, in a for a particular financial year. So you got 100 rupees and 20 rupees your entitlement, because the administrative expenditure ceiling is on receipt. 20 rupees was your administrative expenditure ceiling, and you spent only 18 rupees. You can carry forward the remaining 2 rupees to the next year and adjust it. That's the change that has happened. What is administrative expenditure is all written here. So basically, you will have to take a call as to how to classify expenditures and as admin based on this explanation of what is administrative expenditure in Rule 5 of the FCR rules, and be consistent in terms of ensuring that. The biggest problem that happens is point number two, where it says, uh, you know, expenditure on people, on salary of people who are managing the operations. Now, basically, it means that supervisors should be treated as administrative expenditure. But then that clashes with the fact that if managers were to be treated as administrative expenditure, then we might still cross 20%. There's no question about people who are implementing on ground. So you will have to be clever in terms of understanding what is supervisor. So it says all expenditure towards personal for management of the activities of the person. Okay. And of course, salaries, wages, and travel, everything. So what is in your understanding? Because that's not explained. What is management? Is a supervisor a management, or is the management at the top level, is something that you'll have to take a call on, and then be able to defend and be consistent year after year. The others, I'm not saying. There are two provisos or caveats which says that if you are a research agency and the payment that you are making to your research department people as salaries is not an administrative expenditure. If you are running a school or a hospital, payments that you are making to school teachers because or to the doctors, because they are directly benefiting, is not administrative expenditure. Same for research, because the research work is being done in the field. It is not in the nature of administrative. So this is only one way of helping those organizations which are purely into research, because then if there is nothing like management of the activities, and if that were to be considered as uh, administrative, then probably they will never be able to adhere to the 20% rule. Anyway, so this is administrative expenditure. Now, I this slide gives you the architecture, and this is a slide which gives you in nutshell what is FCRA in just one slide. So I have categorized it as registration, as regulation, as restriction and consequences of non-compliance. Everything gets captured in a certain sense here. So if you are a person or and you want FCRA, the first pillar in the architecture is registration. Now, registration means that you are eligible for getting yourself registered, and you get a certificate of registration for a period of 5 years, and that registration has to be renewed after 5 years. Remember, in the income tax also, the same situation is now in place. However, registration of FC, the non-renewal of FC only prohibits FC. Non-renewal of your 12AB prohibits everything. Okay, so that's the kind of difference in terms of implication or impact that can happen, where I consider the 12A registration or a renewal of 12A registration even more critical than FCRA at this point of time. So every focus is should actually be on renewal of 12AB, and of course ATG if you were to do certain things like CSR and all that. Now, if you are not eligible for registration, which says, well, 3 years of track record, 3 years of balance sheet, 15 years of core expenditure. Suppose you are not there, okay, and some donor comes and wants to come give you money. So for that particular donation, you can get a prior permission. Of course, there are conditions. You will have to actually comply with the procedure and get prior permission. The second one is regulation. So there is this regulation which says your bank account for FCRA will be separate. So you will have to have a separate bank account with SBI New Delhi, and you can have another FCRA account, and you can have utilization accounts also. That's the three tier for operating foreign contribution. Second is separate books of accounts. Please remember, for FCRA, your accounts people and you have to ensure that books of accounts are separate for receiving and utilization. Please remember the FC expenditure is based on actual payment basis. That is, it is based on utilization. So when we talk of expenditure, we talk of utilization as the word, which means that something has actually been paid out. It's not something that has been incurred. Annual return and declarations, very critical. Every year you have to file, otherwise there's penalty. There can also be non-renewal because of non-filing of your annual return timely. Okay, that is also one condition. Various changes that happen are the regulation here. So if you have change of your name, your object, your board members, okay, your bank account, then all those changes will actually need or you to kind of or go to the FCRA and get intimate that change and then get approval. The restriction is on administrative cost, as we have already seen, as administrative expenditure, prohibition on speculative activity. So the law says that you cannot invest your foreign contribution into some investment where there is risk of, you know, appreciation or depreciation. So basically, they are saying that please invest your money, FCRA money, only in kind of fixed interest securities where there is a certainty of the return and there is no uncertainty in terms of appreciation, depreciation. Prohibition on transfer for to another person, that we already know has been brought about in 2020. After that, even if you have another organization with FCRA, you can't give FCRA to them for implementation. So all FC money that comes to you has to be implemented by you only, either by you or through vendors, consultants, but not through other organizations which are charitable or which are registered under uh, FCRA. Use of foreign contribution only for the defined purposes. Those 5 limbs that we have talked about, please go and have a look at your certificate and the nature of activity that you have selected. If there's a mismatch between that, the charter and the objects in your income tax, please correct it in the during next renewal. Otherwise, you know what you are doing and what your accounts are talking, what your activities are talking, and what your nature of activity. If there's a disconnect, then that can be a problem. The next one is consequences, which are very, very stiff. So there can be cancellation, there can be suspension of your certificate, there can be, prosecution, criminal prosecution. There can be penalties. Just as I said, annual return, if you don't file on time, there is penalty. If you breach 20% of your administrative expenditure, there is penalty. For everything, there is a penalty. And then you can go in for condonation of that penalty or a reduction of that penalty, but once in 3 years only. So those are all things that this is the slide which gives you in a nutshell the kind of architecture that there is. Each of these points is linked to a certain section and certain rule. But we will get through this an overall view of what FCRA structure is like. Now, the reporting forms are these. Uh, so you have what is the most important forms are, if there is hospitality, then form FC2. Every form has FC prefix, and then the form has a certain number. 3A, 3B, 3C is basically for registration, prior permission, and renewal. So those entities which have registration, they will need to use form 3C for renewal. 4 is the annual return. Every year you have to file the return by 31st of December. This is mandatory. And then you'll also have to give a lot of declaration saying we have complied with this, we have not crossed 20%, we have none of our board members has any prosecution, we have not put money in speculative activities. All those declarations actually mean that you are telling the department that we have complied with all the sections of the act as well as the rules. So the department is actually making you say yes, we have complied, and then telling you, and this auditor also certifying now has more responsibility in the FC4, uh, saying that if we then catch you, then you are in trouble because you have made this self declaration yourself. So the department has very smartly done all this. So there are 15 declarations that have to be given in form FC4, which is nothing but basically an understanding of the FCRA Act and the rules to say that we are all compliant. The FC 6A and 6 to 6E basically are for change in name, 6A change in object, 6B, 6C is for change in your other bank account, 6D is for utilization account. 6E is for even a single change in your board member, deletion, addition, both included. And whenever you make an addition, you'll also have to file a pro forma in AA, which has to be signed, notarized by the person who's becoming a new member. And this particular person needs to become needs to be approved by MHA. So if so if that person is also supposed to be a bank signatory, then our suggestion is please make that person not a bank signatory, because the SBI is going to ask you for the approval, which is not in your control. So get that person become a signatory only after the 6E has been approved, then only go to SBI for change in bank signatories. This is something that our suggestion is. Please remember, you have to also comply with the provisions of NGO Darpan, which means your organization needs to have a unique identification number on Niti Aayog's Darpan, and the Darpan is very critical. Without the UIN, you cannot do anything in FCRA. Without the UIN, the banks will not entertain you for any changes. That's the current position. So very important to also see that these compliances are there. Form number FC7 is basically surrender. If you are fed up with your FCRA, then the government now has given you the right to surrender the certificate. However, surrender would mean that all assets created through FCRA will go to the public authority. So if you have assets in your organization, please do not opt for surrender. If you have assets in your organization, please do not opt for non-renewal. Now moving on to, this is important. So those organizations which have FCRA, here I am giving, and this is something that has come from the department itself. Okay. Uh, the department has said that these are some of the reasons on the basis of which we will not give you registration or will not give you renewal. That is what something that as programmers we need to know. Key fun. So the first thing is that we have there are no activities in the last 2 to 3 years. We are not seeing any activities in the last 2 to 3 years. Okay, then you'll not get it. If your key functionaries have any proceedings against them, if your the form is incomplete, okay, that's all right. No response to clarification sought. So sometimes we don't tend to look at, because everything is online. The department has given you time, you have not clarified. Office bearers are not available, so they have given their address but they are not available. Organization is not is given the address, but that organization is not existing at that given place. So one registration is already cancelled. Diversion of foreign contribution or anti-development activities that have been, or malicious protests. Now, this is something that we must know. We should not become too enthusiastic and go overboard, is what I'm actually saying. So we must know that if the department comes to know, if the ACB, ACID, the ACB, the IB at the time of your renewal or your registration come to that conclusion that, well, this organization to all this, then they will definitely not go. Radical terrorist entities. Okay, they have not even defined this, but this is something that what I'm saying is they have said if this is what it is, we'll not do it. If there are adverse inputs during field inquiry, we all know that when there's a renewal or when there's a registration, there is a process of inquiry. So if in inquiry, the inquiry results are not right, then adverse inputs are there. Then if it affects the social or religious harmony, or if there's forced religious conversion, if your total uh, expenditure in the last 3 years is not more than 15 lakhs on the objects, definitely you will not get registration. We have already seen that. Now, there are 2, 3 more conditions in terms of rejection for renewal. Those are important. So we are talking about registration and renewal, but this one is this is more interesting. If no FC has been spent in the last 5 years, even if you go for renewal, the department might reject, saying that, well, there is no point in renewing your registration because you have not spent anything in the last 5 years. So continuation of some FC activities is important. FC4 not non-filing in any of last 6 5 years 6 financial years. So we had seen one of the regulations was filing your annual return. It says in any one of the financial years or in the last 6 years, which means in the last 6 years, meaning those years when you were given a registration and now you are coming up for renewal. In even one of the last 6 5 financial years, if you have not filed your FC4, then the renewal may be rejected. then there are certain violations of the act. We have seen the 20% admin. If it is being constantly violated, if there is discrepancy in your annual return that is noticed by the department, if the FC is not utilized for the purpose, if you have not filed your change intimation for change of object members, that is the 6A to E. Okay. Um, if you have not filed the audited financial uh, report with the FC4, you all know, as I said, separate books have to be there, and your FC audited report or financial report is different from your total financial report. So that has to be attached with the FC4. If you have not filed that, that will also be a condition. If the FC funds are transferred to a non-FC bank, this is mixing. Okay, so non-FC bank means a local bank, and that mixing is not allowed. If you have made any inter-charity donation, that's completely prohibited. But if you have done that, if you have mixed FC and non-FC funds, so you'll have to keep FC funds separate and non-FC funds separate. Those are some of the things that we have to understand. Now I come to the law relating to CSR. So we have completed FCRA broadly, and you would now know what actually that position is. Uh, I'll quickly tell you what the law is. So CSR in our country is mandatory. We all know that. And that is governed by Section 135 of the Companies Act and Schedule 7, which defines what are the activities that can be done under CSR. Now, quickly telling you what the provision is. So if a company has a turnover of 1,000 crores, net worth of 500 crores, or net profit of 5 crores or condition, then it will actually come under the purview of Section 135 and is under obligation to do CSR. They will constitute a CSR committee, and the CSR committee will do two, three things. One, it will make policy and recommend it to the board. It will recommend projects to be taken up to the board, and it will also monitor those. So for us, the CSR policy is critical. It's available in public domain. The CSR committee is important. It's available, and the CSR committee is the focal point for CSR work. Now, what happens, and please remember, the board of directors has the overall responsibility for compliance with this particular provision of CSR. Now, how much is the amount of allocation that needs to be made? The allocation that needs to be made is 2% of the average net profit of that company for the last 3 years. So suppose the company were making in the last 3 years 100 rupees as profit, then you add up those 100 rupees, it becomes 300 divided by 3, it becomes 100, and 2% of that 100 is what is the amount of money that has to be, allocated, that has to be allocated for CSR activity during that financial year. Okay. You can have local area preference. That is, if you are in a geography and your CSR policy says, I will like to allocate more money for that local area because I'm taking money, resources out of that local area, it is possible. So you'll have to read in the CSR policy, what are the activities which will be undertaken through CSR. They cannot undertake all activities which are mentioned in Schedule 7. Are those activities in line with the objects for which you have been set up, and the activities that you are conducting? Is there a local area preference? All those will give you brownie points or plus points in terms of being able to get money, CSR fund from that. Now, all that you can see without having to go to that company, because that's all available in the public now. So what I'm trying to explain to you is, why do we need to know the CSR law? The CSR law is applicable for CSR companies. However, since we are the people who are accessing and managing CSR funds, unless we know that, there will always be a conflict with the corporates or our non-understanding of why the corporates are asking for this kind of a thing. Now, earlier, prior to 2021, there was a situation where this 2% allocation, if it was not spent, it could lapse, and no questions were asked. Only an explanation was to be given in the board report. However, in 2021, there was a major shift. That's what we call as paradigm shift. Please remember, CSR law in this country is hardly 12 years old, so it's also evolving. The government saw that, well, 2% allocation had to be made. The companies were doing 2% allocation, but they're not spending. Okay. Because that seriousness was not there. Now the government said, well, that 2% money, you can't just explain and say we could not spend. That money has to be spent, is what happened in 2021. And that's how the entire game has changed for CSR. That is what you need to understand. It also means that you as implementing agencies, we are called implementing agencies in the CSR law, will have to be on top of things to ensure that the spending happens. Now, what if the spending does not happen is something that I'm saying. So 2% was not spent, whether they didn't spend or you didn't spend. Because if the company were to get work done through implementing partners, you are the ones who are responsible for spending it. Okay. They are the ones who are supposed to report to the authorities whether the spend has happened or not. But who's the actual spender? You. And the ability to spend money and the ability to get more CSR funds is all conditioned on the on how you perform. So what the provision was changed was that there were two kind of projects. Please remember, CSR is for projects. CSR is not for corpus. CSR is not, unrestricted. CSR is not defined. It is for a defined purpose only, and it has to be considered on spend basis, not on giving it and as advance. Only when the expenditure has happened is when it will be treated as spent. Otherwise, the money is available as unutilized, as it is called. So, two kinds of projects were what was defined. One is something called standalone, where the project will be completed in within 1 year, one financial year. So suppose capital goods and things like that were 1 year standalone. And if the money was not spent within 6 months, you will have to deposit it in one of the Schedule 7 funds. So Schedule 7 has activities and also has four funds: the PM CARES, the PM National Relief Fund, the Clean Ganga, and the Swachh Bharat Mission, the Kosh. So in one of those four, the money which is unutilized, unless it has been repurposed, it is also possible to repurpose it by the board deciding to do that. But if that is not done, that unutilized money has to be deposited. The second category of projects or activities is what is called ongoing projects, and that is precisely what we do. What we do is ongoing projects, because we are into the business of demand generation, behavior change. Okay, and behavior change does not happen in 6 to 12 months. So normally, corporates will give us ongoing projects, which means they are going on year after year. They are multi-year projects. Now, what is the provision in multi-year project is what we need to know. One, that the multi-year project cannot exceed more than 4 years, which means the year in which it has been sanctioned plus 3 years, 3 financial years. I see a lot of organizations making 6 6 years, 5 5 years, because that's how we are used to making programs and making budgets. But under CSR, the total number of years, including the year in which it has been sanctioned, cannot exceed more than 4 financial years. Then the project has to close, or even though a new project on similar lines is given, but that project has to close. So suppose on 20th March 2025 we got the project, then year one is 24 25 or 25 24 25, then 25 26 26 27 27 28 28 March 28 will have to close. And if the money is not spent, then within 30 days that unspent money for that project will have to be deposited in one of the one of the funds. But during this period of 4 years, if there is unutilized CSR amount, then within 30 days of the close of the financial year, that money has to be deposited by the company by opening a unutilized CSR account in a bank, which means that if we are implementing partners, then by the within the first week of April, all our expenditure for the year should be compiled and reported to the corporate, so the corporate can now see how much money is unutilized, not advance. So suppose I'm an NGO X, I got 1 crore rupees and I spent 80 lakhs on 31 3 2021 25, but had 20 lakhs in my bank. Is that CSR spend? No, that's not CSR spend. So that will be the unutilized amount in the allocation of 2%. And that 20 lakh rupees is something that will have to be deposited by 30th April. A lot of NGOs tell me, why are they asking our books close on 10th, 15th, and this is the month of March when we will take more time. But please remember that the corporate has to not only make their accounts finalized, but also has to decide whether there is unutilized CSR amount and has to deposit it by 30th April. Otherwise, there are penalties both on the company as well as the officer in default. Earlier, there was imprisonment also, but that has been toned down. So, what I'm saying is we need to understand what is the reporting requirement of the corporate, so that we have systems in place for ensuring that the information that is required, rather than actually questioning the corporate and spoiling our relations, we make our systems such, because this is not going to happen on 31st March 25, it's going to happen on 31st March 26, 27, every year. And if we are looking at CSR funding as a source of funding, then our systems have to be adjusted to what is the requirement in the law. So this is one very important factor that needs to be understood. The next one is definition of CSR. Here I just want to only say, so what is CSR? CSR, any activity which is included in Schedule 7. I have not copied Schedule 7, but it includes everything which is under the SDG, everything which you can do, plus the four funds, of course, as I said. Now, what is not CSR is what I have mentioned here. So, two, three things which we have to be careful. I have mentioned five of them, but two of them are very critical. One is that the CSR spend should not give undue marketing advantage to the company's products or services. So we have to be very careful as implementing partners. While we have to acknowledge the contribution that they have made to us as through CSR, but we do not cannot go overboard and try to publicize or market their products and services. That is not CSR. While companies need to understand, but you also need to understand, so that you know that you do not cross the threshold or the limit. Second is, any activity which is the product of that particular company is not going to be treated as CSR. Okay, any activity which is benefiting the employees of exclusively implement benefiting the employees is again not this thing. So if some organization corporate were to tell you, well, that we want you to have a school for us, but only school for our the employees, children of our employees, that's not CSR. However, if the employees' children are incidental to the overall school being open for public at large, then that's okay. Corpus donation is not CSR. I keep on seeing, so sometimes the NGO goes and says, well, we want 5 crore. We'll give you 5 crore. Now you can't make a project of 5 crores. He's just thinking, well, the best thing is to get a big 5 crore corpus grant from them. Corpus donation is not CSR. Okay. It may be given by the corporate, but not as part of CSR. So corpus donation, because we know that CSR is on project basis and on end utilization basis. Okay. Kind's contribution is not CSR. Any expenditure other than training for sportsmen outside India is not CSR. Okay, moving on. Uh, who can be implementing partners? So the point number A and point number D. So the company itself can do it in combination with other companies can do it. That's all possible. Okay. But the A is the one which is floated as Section 8 company or as a society or as a trust registered under 12A and ATG. Okay. Established by the corporate. And two of those the companies, so each two foundations of being established by two separate companies can also become implementing partners. These are the competitors to us, because these have been floated by the company, and the company may float this as well as directly also give it to D. So the way we look at CSR is, if the implementing partners who are the grassroots, who are at the grassroots and who understand community better than imposing another entity which has no connection with the roots. I mean, at the time of being set up, the obvious advantage is there, but the major problem is that the corporates find that it's a question of dealing with the not for profits in terms of, I'm not making saying that the corporates are absolutely clean on everything. I know that's not the case, but that's how the thinking is. And we are in that situation where we are on the receiving end. But I'm not saying we have to receive without conditions or unconditionally. No, we have to put up our point very clearly after understanding the law. Now, D is people like us. C, B, and C are set up by governments, and D is people like us. So we need to have a 12-way registration. We need to have an ATG approval, and we need to have a 3-year track record. That is one thing. And we need to also have the CSR1 registration. Now, these are the these are the four entities that can do. I want to also mention that for management of CSR activities, out of the CSR 2% budget, the sustainability department or the CSR department can take allocation of up to 5% of this 2% for management, for administration, for supervision, for whatever, but not for implementation, not for impact assessment, but for, managing their department. That is something that you need to know. So earlier, that was not the situation where corporates used to say, well, we don't have any funds as earmarked, and they used to look to the CSR fund that they had given where this could be accommodated. But that's not the case now. So you can get back to them and say, well, there is a 5% administrative overhead available with you. The CSR committee, why I'm mentioning here is it has a huge role to play, not only in terms of sanctioning projects, getting the annual action plan, it's called the AAP. So the CSR committee has to make the annual action plan, and the annual action plan is available on the website of good companies, where you can see whether the company is going to implement it itself or through its own foundation, or I mean, through its own Section 8 company or trust or society, or through third party implementers like us. So now the AAP is also available for a financial year, partly, if not fully tied up, and the rest of the amount they are saying PBD. Now, if you are doing an proper analysis on your desk, you will be able to figure out whether there is a possibility or an opportunity that is, that window is available or not. So a lot of times we do not need to go. We have to be intelligent enough because information is available today. Information is available today, so we need to corroborate that information. We need to corroborate the CSR policy. We need to corroborate the activity that they will sponsor. Local area, CSR committee, annual action plan, annual report of CSR, all that is available. Okay, so that is something that we need to, and it has been made mandatory to put that in public domain. So the role of the CSR committee is more expanded, and therefore the CSR committee and the CSR division is asking for more information from you, and that is the reason why the accelerator is more on us, because where does the data come from for CSR people if they are implementing it through us, from us? So we cannot get frustrated. We have to, both in terms of financial reporting as well as programmatic reporting, and in terms of the understanding of the geography and the activities, we have to be even much better now compared to what we have been, because these people depend solely on us for being able to put up those proposals to the board for approval. So they need this information. We need to provide this information so that we get selected. Then, of course, the annual report for CSR, there is a full template now, and that template, the information again comes from us finally. That is why I mentioned the CSR committee, just to tell you that there is a lot of work that we need to do so that we can have ourselves organized to provide all this to the CSR committee. The next one is public domain. Okay, I've already told you. It's all available in public access. The AAP, the CSR policy, the CSR committee, all that is available because it's mandate. The CFO of the corporate will certify the utilization certificate. So the financial data has to be such from implementing partners that it does not do back and forth, because the UC is not signed by CSR committee. It's the government has been smart. They said no, the UC has to be signed by the CFO who understands finance, and the CFO will not sign any UC without being fully convinced. So your finance department, your method of accounting, your financial data that comes from the field has to be accurate. Otherwise, there'll be a lot of back and forth, and the financial reports will not get closed. The last one is impact assessment. The impact assessment actually means that now CSR funds doesn't mean that you did the project and that's about all. No. So there is a provision of impact assessment where any corporate whose outlay in the last 3 years is more than 10 crores on CSR, and where the project is funded more than 1 CR to any particular, where the size of the project or the cost of the project is 1 CR plus, they will have to get it done, get impact assessment done uh, through a third party, through an independent agency. This is different from your inline or your concurrent evaluation or your baseline that will be part of your budget. That's different. This impact assessment has to be done by the company, not by you. And this impact assessment, they have a budget. But the critical factor is that the impact assessment will be done after a period of 1 year from the close of the project, just to ensure that the at the time when the impact assessment is done, can that sustainability be ascertained or not. That is why government said, well, let's not do the impact assessment after the project. The impact assessment is to be done after 1 year. So the project closed on 31st March 25. The impact assessment will be done on 1st April 2026. Now, if you have not done your work properly, probably your sustainability will not come out in your impact assessment and you may not get the CSR fund. Very important, this factor. I now go to the last part in our section, which is on ESG and sustainability. So I'll just give you a broad overview. Why CSR and how does this CSR fit into the ESG framework? So sustainability is a broader word, and the sustainability development goals, as you all know, the 17 SDGs, which uh, we have to achieve by 2030. Now, sustainability, what sustainability mean is that companies do not stop doing looking at economics, but they start balancing economics with things like social, environmental factors, governance factors. Now, if you balance that out, then you probably will be a better corporate citizen. Is what is the understanding? You will have more sustainability in the area that you are working or in the country that you are working. Okay. uh, uh, you continue with your business, but you do not compromise with your broader uh, objective of looking at social, environmental and governance. So sustainability is basically looking at your business, your economics, but also balancing it out or considering your social, governance and environment. Now, the social part of the ESG is what is actually the CSR, whereas environmental and governance are part of ESG. So most of the activities under CSR are actually attempting to address the S in the ESG. Now, so uh, sustainability is at the top, and below that you have ESG, and the CSR is also feeding into the S of the ESG. That's how one has to look at. Huh? Uh, so basically, the CSR feeds into ESG, and the ESG is reported through the BRSR framework, which is called the Business Responsibility and Sustainability Reporting Framework. Now, why I'm trying to say this is I'm trying to make you explain why how CSR is now feeding into the bigger picture. We are only bothered about ECSR, but the corporates are not just bothered about CSR, they are bothered about their performance on environment, social, and governance. And how does this work that we do under CSR? Because we really do not do on governance, they might have to do work on environment, they might have to do some work in terms of their value partners and things like that. We might do some work in terms of environment in schedule 7, but the social part of ESG, which are the indicators that they have to address, is something where we are contributing, but the corporates have to now look at more aspects of sustainability, just not social. That is what we have to understand. But we are contributing through our CSR activities to the overall ESG performance of this corporate, and therefore all corporates put together, their ESG performance contributes to the sustainability of the country or the world or global, whatever, or our SDG goals. Now, I have already told you that as far as CSR is concerned, there is this CSR 2 form that has to be filed. The annual action plan, we have already seen. The annual CSR report, we have already seen. As far as ESG is concerned, there are these three things. Earlier, there was what is called as the Business Responsibility Report, the BRR, now discontinued, because that was at the time when there was the National Voluntary Guidelines for Environment, Social, and um governance. But that has been replaced with what is called as the NGRBC, the National Guidelines for Responsible Business Conduct. And that NGRBC guidelines ke basis pe this BRSR reporting framework, which is the current reporting framework, has been introduced for companies. So please remember, when they do CSR, there the three reporting that they have to do is the CSR1, the CSR2, the CSR report, and of course the annual action plan. But then they have to go one step further. Some of the companies which are mandated, not all companies, but voluntarily they can do. So they have to do the BRSR, which is the report which says how we are performing on our targets of ESG for this particular company, and that is the quantifiable, quantitative, qualitative factors that are part of the reporting framework, and how the company is doing. So our CSR work finally ends up also in the BRSR, which is the top level report that has to be that the companies have to give. Not all companies, we will see the journey, but slowly the government is going to actually bring this BRSR, because that's a very, very new framework. But you must be able to understand how our activity is going finally to sustainability. That is the kind of connection that I am trying to. Then there is this BRSR core, which is part of the BRSR, but which is more through an assurance provider in terms of certain activities. So I will not detail much, but we'll go to the I'm not going to do CSR2, which is an annual return that has to be filed on CSR activity. Then the journey of ESG is what is this is important for us. So I said, for in 2011, so this is all very recent. 2011, the Ministry of Corporate Affairs came up with the National Voluntary Guidelines on Social, Environmental, and Economic. Then in 2012, the BRR was introduced, and the top 100 companies were supposed to provide their performance on NVGs. The BRR then was integrated into the financial reporting. So the government said, well, BRR is actually talking about other aspects other than financial, but the stakeholders are also wanting to find out how is our financial allocation also connected with with the ESG. So there has to be a connection between financials as well as these programs contributing to. So that is the integrated reporting that happened. In 2018, the NGRBC replaced the NVGs, okay, the National Guidelines on Responsible Business Conduct. Very important to understand these concepts. I'm not saying that you're now sitting in the company, but you are also sitting in your organization, understanding the bigger picture of how your work is finally ending up to sustainability. And that is the connection that I'm trying to give you on a broader sense. So the last document on responsible business conduct, which means companies with CSR and other activities have to be responsible. And the NGRB, National Guidelines for Responsible Business Conduct, is a set of 9 pillars and core elements in these pillars that we will see in the next slide. What is expected from these NGRBCs, how responsible business conduct will be demonstrated by these companies. There are certain pillars, and then the government changed from BRR to BRSR the from 2021, just 4 years back. They said 1,000 top companies based on market capitalization from 22-23 will report on BRSR, and 23-24 onwards under BRSR core. So I think if you see, this entire framework is just about couple of years back, and it is being refined. But all our CSR activity that we do as implementing partners at some stage or some points of our work will finally come to the BRSR report, and become the report card of that corporate in terms of ESG. And the more forceful our work is, it will speak prominently on our in the BRSR, and therefore give those points, because ESG is becoming one of the how you are performing on ESG is becoming one of the critical factors on the basis of which funds are being given to companies. If your score on ESG, if your performance on ESG, which stakeholders are now evaluating, banks are now evaluating, is good, then you are a good corporate citizen. Probably you will also be getting good, more financial. There are ESG bonds that are getting issued in India. Okay. So that is something that I want. Now, these are the 9 NGRBC principles. and there are core elements in each of these principles. So, how is your product behaving, how are you behaving with the consumer, how are you behaving with your other stakeholders and engagement, what is your ethical, this is governance. Point number 1 is ethical. Public policy engagement, again governance. Okay, environmental responsibility, again, is e part of the ESG. All right, consumer engagement. So all these have elements, core elements, and you have to report in BRSR, in your business responsibility and sustainability report, on all these 9 pillars like this. So your each principle will have core elements. So you can go to the NGRBC and read that. And each of these principles has have core elements against which you will have to say how have you performed. And this is part of the SEBI's LODR, the listing obligation. So you're listed, the top 1,000 companies, voluntary BRSR is also possible, even if you are not in the 1,000 top 1,000 by market capitalization. So in the framework, you'll have to give general information in the BRSR report. You'll have to give management and policy disclosure. And the third, which is important, is management means what is the management? What are the various policies that you're implementing? And this is coming from the corporate. And then principle wise performance will have to be disclosed. There are some essential indicators and some leadership indicators on the basis of which you will have to perform. And this BRSR report gives your ESG report card and is evaluated by various stakeholders. With that, I close my presentation. Uh, we have covered a lot of ground today, but I promised you that we will cover it. I am I have crossed my time by 5 minutes. I have been fast. Let me just confess that, because if we had not done it, I think we it would have got spilled over to the next session where we need to again continue. And therefore, I wanted to do that. We can take questions now, and if there are any observations, there were some questions in the earlier sessions, and in terms of the statutory provisions and things like that. I have not talked to you about any section here. All sections are mentioned on the PPT, but I have tried to explain to you as programmers, why are we so special? Why, as not-for-profits, we are so special, or we are so distinct from the rest of the entities which do business. We are a social enterprise. We are into the business of as a social enterprise. We are also into business, but our social business is given a different pedestal or a platform, is what the key takeaway is, for you to understand where to put your emphasis in terms of understanding when you do your job on the ground, what things you have to be slightly careful so that you don't go overboard and cause harm to the organization. I am stopping the presentation. Okay, so I'm reading out the question. The question is, how is public different from private? There is no specific definition here, but what is said is that where the beneficiaries are not identified. Okay, so the public at large is not referring to geography, okay, because we can't cover every geography. But the public at large means that you are not extending services to any specific beneficiary or identified beneficiary. But within the overall set of beneficiaries that are available, you are giving that benefit to all without any restriction. If you are not doing that, that becomes private. 80G tax benefit in the new tax regime has been removed to NGOs. No, no. In the new tax regime, 80G has been removed, because in the new tax regime that we saw, which is the default tax regime now, there is this chapter 6 benefit which has this 80G is not applicable. It has not been removed now. It was removed way back in 2021. But now, since the new tax regime has become, there is more carrot in that the government has dangled for the new regime. Therefore, it is becoming more lucrative. The government is trying to dissuade people from investing, but they are saying consumption driven. Now, because this is consumption driven, they have reduced the tax slabs made the new scheme the default scheme. In case you don't opt for the old scheme, then automatically you will be in the new scheme. But because of that, the ATG benefit is not that lucrative, because there is nothing like ATG under the new scheme which people will opt. So if people are opting for new scheme, then they will, even if they are making donation, there is no provision for claiming ATG. That is why the question, there is a big question on ATG itself. Why ATG? However, if you were to do CSR projects, you will still need to have ATG. So people have started questioning whether organizations should take ATG or not. Two things. One, CSR, ATG mandatory, FCRA not mandatory. Many big organizations, maybe uh, in India, especially family run, especially grantors, big ones, they are still insisting on ATG. So if you do not have an ATG, then you are, in the process of due diligence, you are eliminated. That's what I want to say. If you have to spend 85% on of activity, what period? 1 year. Is bank interest also considered income? Yes, it is. uh, 85% is for the financial year. When I'm talking income tax, it's all financial year. Please remember that. There's a question which says, please suggest what should be done now if we have built corpus from the foreign grant. We now we now know from your earlier session that we cannot build corpus out of foreign grants. Do we have to take permission to use these corpus now towards the objects of the company? So I'll just tell you the background. You do not have to hastily do anything. What has happened is, we have learned today that foreign contribution is for a defined purpose. Corpus is not a purpose. This is something that is settled. Okay. And it is settled in law. Now, what is happening is that people have got corpus over the years and they are still carrying corpus. But where the FCRA auditors are going for inspection, they are raising this objection. If they have not come to us, just don't quickly liquidate the corpus. What they are saying is, corpus donation that you have got as foreign contribution, you cannot continue. You will have to liquidate that corpus for the purpose for which you have identified in your FCRA. So a lot of those people to whom they have gone as auditors, they are saying, within the next 3 years, please wind down this corpus for the nature of activity for which you are registered. So those people are now liquidating that corpus and using it. Say if there's that's social and that is the work that they are doing, then they might actually do it for, you use the money for social activity. However, I'm not asking you to immediately liquidate that. Many organizations are carrying corpus. They have not been issued this stricture. So unless you feel that there is some, uh, if the amount is very little and you are not within the, or your FCRA mobilization is not that great, you please continue without any change. I am only saying that principally corpus is not a permissible way of of foreign contribution, is what I am saying. But this has come in limelight after the foreign FC auditors have raised the objection that corpus was not received for a purpose and FC can be received only for a purpose. Today, if the corpus is Indian donation, it is recognized in income tax law, as we had already seen. Query on admin expense. If we run our program from rental center, will the rent be an admin expenditure or program expenditure? So I'll tell you what. Uh, you have to be one consistent. I told you. I would then say that if the rent is in the budget of that project only for that project, then you can still consider it as program expenditure. However, if the rent is for your office, which is supporting your entire office and all the programs, then that definitely will be administrative expenditure. But you'll have to be consistent. But what I'll suggest is, if that rental is for the budget, in the budget is for the project and supporting the project and will close once the project is over, I think that can be considered as program. Similarly, for use of vehicle, if that vehicle is being used for program activities and you can make record for that, then probably you can still. So it's something that you'll have to be very clear. You'll have to be very focused and you will have to be consistent. Whether the salary of program managers or program, again, if they are into super, if they are managing the survey programs, they will definitely be admin expenses. Some of the organization is saying management means only managing the organization at the top level, not the projects. Our understanding is project management is also admin. So you'll have to decide that your contracts have to be defined like that. If you are able to define the contracts as not something like management, but by coordination or things like that, those changes people have already made. Please confirm uh, lifelong validity as of date. People are talking of 3 years. That is wrong. Okay. Tanima, there is no currently there is no limitation on CSR1 registration. Whatever you have is valid. There may be something like that in the coming years, including reporting on MCA portal by the implementing agency. Under the FCRA, if program activities like training institutions or educational institutions on human resources, would these costs be classified as program? Again, I said that if they are educational institutions, the please use the two proviso of Rule 5 of uh, the FCR rules. So I'm not going to repeat that. If you are able to prove that the salary to teachers is or the trainers that the remuneration is directly for conducting the course, then probably yes, you can show it as program. Explain buying a fixed asset under CSR donation and it is complete management. And it is complete management. मतलब मेरे को नहीं समझ आ रहा. You can buy fixed assets and under CSR donation, that's not a problem. And please remember, under CSR, if some assets have been created by a corporate, those assets cannot be retained by the corporate, not by you. You, if you have bought, you can keep it as part of the CSR grant that you got as fixed asset, and the contract does not say you have to return. That is your asset, and just like any other donor, you have to. But if the corporate has created an asset earned in past or now, they will have to transfer it to you, people like you. NGOs be has supporting for SHGs and JLGs and collecting a commission, is that exempted from income tax as long as you can show that this is for the object for which you are doing. I would say that, well, this can be some kind of, instead of a commission, some kind of a subscription for the object is how you should state it. Then it will still continue be uh, uh, yeah, Shumunga. I cannot understand 100%. The answer is uh, please take out time tomorrow, see the recording. I will share it with Impact Yoga and they'll share it. Read the presentation. I have made the presentation and I have explained to you in the recording in such simple words that you will be able to understand it the second time. I am very sure. But please don't miss reading and listening again. That is what I'm saying. Only then it will actually become really imprinted on your in your mind. Matching cost from the stakeholder, is it permissible? Yes, you have to report it as an income, and you will have to show it as matching cost in your budgets. All right. Any questions? Quickly, 2 minutes. If there are any questions, unmute and ask. Otherwise, we'll close. We are already beyond time. ठीक है. If there are any questions, you can write to Impact Yoga and I'll answer. That's not a problem. So we can close the session today. Thank you very much. Have a nice weekend.